Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
It's mean, it's vicious, it's backbiting, and it takes absolutely no prisoners. This is Share Shootout on CNBC Africa, first in business worldwide. I'm Bruce Whitfield. I am the judge, the juror, the eliminator. Now, when SAA talks about a turnaround, are they referring to the company or just to turning around aircraft on the apron and then sending them off to their next expensive destination? Did the Transport Minister get an incorrect bill before she ordered SANRAL to fix the billing problem? And was the letter given to Adcock's chairman really meant for the chief executive? We don't know the answers to all of these questions. We wish we did. What we do know is we have a man who not only snaps pictures of rhinos, giraffes and elephants and anything else with four legs, he actually blogs about them as well. And another who spends his free time in constant motion. So will Mike remain or will he fade away? Introducing Mike the Milestone Haworth from Applied Capital Insight. 7 appearances, 6 vicious wins and 1 loss. He takes on Andrew Big Daddy Daycare Dittberner from Cannon Asset Managers. He's got big bags under his eyes, 3 appearances, 2 wins and 1 loss. Our guests have pre-picked 3 shares. Neither knows what the other holds, but each must accept at least one of their competitors' picks. And the longer they leave it, the more likely they are to have to accept something from the bottom of the list they really might not like. Each has got 30 seconds to argue their stock pick. So let's let the Share Shootout begin. Would you like to have a little nap first? Because I know with a small child in the house, it can be a bit debilitating. Or do you want to go first?
I think
you want to go first?
Last 30 minutes, yeah.
Okay, you'll last 30 minutes. Let's see whether or not you do. This is one that you like a lot, and this comes from, I think, the Cannon Asset Managers Superdogs file of Metair investments. In 30 seconds, tell me why.
They're a manufacturer for original equipment and the aftermarket. The big focus is on batteries at the moment, and their technology here is a start-stop battery. They're one of a very few firms around the world that has this technology. They're expanding into Europe. They did the Rombat acquisition a few years ago. They're in the process of doing an acquisition in Turkey, which gives them access to the European market, Eastern Europe and Russia. From a valuation perspective, very attractive. Their earnings are underpinned by cash. Over the last 10 years, they've grown their earnings at an average of 15% per annum.
And your 30 seconds are up. Quick question before we move on to you to shoot it down, Mike, because I know you will. Investing in Turkey. The last time I checked, the Turks were going a little bit crazy in terms of monetary policy.
Yeah, I suppose Turkey comes with all the negative sentiments that's been going around since the end of last year. The big draw card here is that Mutlu, which is the acquisition that they've done in Turkey. It's the biggest battery manufacturer in Eastern Europe and the Middle East, and they export into the Russian market. So from this, this is where they see the value coming from. So whilst it's a Turkey business, I don't think we need to get too caught up in the politics of Turkey.
Okay, and that's what bond investors have been saying about South Africa. We don't think we need to see getting caught up in the politics of South Africa. But again, from the outside, often things look murkier than they are on the inside. Mike Haworth from Applied Capital Insights. Do you like Metair?
Yeah, I wouldn't flap too much about Turkey.
Oh, no.
But my concern about it is obviously from an OEM point of view, we're actually going into quite a slowdown in our own market. I understand the export markets, and obviously the rand would have helped quite a lot in that regard, where some of those emerging markets have actually depreciated quite manifestly. You don't get the rand hedge effect, so that's not going to give them the kicker at this particular point. I think for me the biggest issue about Metair is the liquidity. It's a pretty liquid stock.
But I'm a private investor. I don't really care about liquidity. I want to go and buy 10,000 rands worth of shares. I'm not an asset manager who wants to go buy a line of 1 million rand or 10 million rands worth of shares.
I've got some. Would you like to buy them?
Hypothetically speaking, of course. So you own some Metairs, do you?
No, I don't.
Okay, just checking. So liquidity becomes an issue. But for a private investor, for a real human being in the real world, is that a problem?
For me, manufacturing in South Africa is a problem at the moment, particularly because of electricity and because of the labour issue. So I steer away from manufacturing, broadly speaking. So for me, that is a bit of an issue. Listen, I mean, I do basically like the business. I mean, I actually think they've got the right kind of the right kind of position. If you're going to be in manufacturing in South Africa, that's a hell of a good place to be.
Yeah.
You know, you've got government
But
support.
you're still going to shoot it down anyway.
I am.
You are going to shoot it down. He's a bit of a party pooper on this one. One final effort to try and change Mike's mind.
Yeah, I think if you look at the OEMs, yeah, you can say that we're going into a slowdown. Metair, they're focusing on the aftermarket as well, and they've got their 3x30 50-50 strategy, which is 50% OEM, 50% aftermarket, and across those two, they want 50% of their earnings to come from the batteries, which are sold into both OEMs and the aftermarket. So I don't think you need to be too concerned with
it's on a multiple of 14.5 times. It's not got a great dividend yield. For a small company, is it really worth a punt?
For a company that sits on a market cap of 9 billion, if you're going to be concerned about liquidity, you're pretty much discarding what, 70% of the market? Because that's where most of the small opportunities lie in that area of the market.
I'm smelling gunpowder.
Yeah.
You're shooting it down. Okay, you're shooting it down. What you don't know, Mike, is what's coming next. You may regret that decision, but it's shot down, I'm afraid, Andrew, despite your best and most valiant efforts.
No regrets on this show.
There can be no regrets, otherwise you wouldn't come back. Okay, Mike Haworth from Applied Capital Insights. Going big, going apparently safe, but pretty expensive. Results out last week. Their platinum sector in disarray. Why would you be going for Anglo American at this point? In 30 seconds.
It's not a commodity price call as far as I'm concerned. It's about restructuring. It's about cost cutting. It's about rebuilding the ROE. And for me, one of the most important things here is that it looks like the diamond cycle is actually picking up. Big question as to whether the platinum sector is going to recover. If it doesn't, South Africa's in trouble. So I would bet on the fact that at some point this year that platinum sector is going to start coming right. And if I'm wrong and the ROE doesn't come out, doesn't get repaired quickly enough, the Chinese or some big company will probably buy it.
Okay, I mean, it's a nice big bet, isn't it?
Just to be clear, it's Anglo-American?
Anglo-American. It's Anglo-American.
Anglo-American.
Well, we focused on the platinum story because that's really the big downside for Anglo-American.
They obviously own 80% of Amplats. Anglo-American, I know you said it's expensive. I don't think it's expensive. If you look at a trailing 12-month multiple, it looks quite pricey. When you start looking through the cycle and you see what it does through the commodity cycle, I don't think it's that expensive on a CAPE ratio.
What's a CAPE ratio?
Cyclically adjusted PE ratio. So
look at, in English, what would that be?
Look at earnings through 7 to 10 years, adjusting for inflation and take the average. So you get a through the cycle view. On that multiple, I don't think Anglo's is expensive. You can do a sum of the parts valuation as well. You can look at what they obviously own the.
I mean, they took 21 billion rands worth of write-offs in the last set of results. Mark finally came out, and they've written down assets in Latin America. He's tidying up his balance sheet quite substantially for a growth phase.
Cynthia Carroll obviously purchased a number of assets at the top of the cycle. He's come in there and seems to be sorting this out. I'm talking up Anglo-American here because
you owed a bucket over them.
Because it's one of our holdings, so it would be very disingenuous of me to shoot it down. So we like the stock as well. We think it's offering value. Mark is making the right moves, making the right noises.
What's interesting is the battle lines that are being drawn in the platinum fight, though, because just recently we saw a joint statement coming out from the chief executives of Lonmin, Impala, and Anglo-American Platinum saying, guys, we can do 9% salary increase this year to AMCU, and then in year 3, 7.5%. We are not going any further. I spoke to Mark Kirifani recently as well, and he was just going, you know what, this is nonsense. We cannot go any further on this particular track. Even the president has come out in an unusually, for Jacob Zuma, strong statement saying, guys, please stop. Let's stop striking. And then we've also had the finance minister recently come out and make an appeal. Whether that makes the slightest bit of difference, I do not know. But the point is, there seems to be a little bit more political will to aid business now for the first time in probably 18 months or 2 years.
But Bruce, Labour's not the only stakeholder in these businesses. There are many stakeholders, and in a big company, particularly an international company like Anglo's or Billiton or any one of those, you can't be hijacked by one group of stakeholders. And for me, it's an important one because there's got to be some balance in all of this. Otherwise, management just going to get run over.
Absolutely.
Which has been happening because they've been politically trying to calm the thing down. But to me, I mean, even if they don't get this sorted out, and at this point it doesn't look like they're going to, there's
Kumba.
Well, there's Kumba, and all the new benefits that are coming out of Kumba because of the mineral rights that they've got, etc., and getting the rail line and the access to all of that. So that's, to me, there's a volume story in that. In the copper side of it, there's a volume story to that. Last year, I think iron ore was up 25% in volume terms, and copper was up 25% in volume terms. this Brazilian Barra Alto looks like it's actually going to now start producing at the end of the year, be up at full steam by 2016, which will help. So I think a lot of the damage is behind.
I think you've convinced him. You're taking it, Andrew.
I'm taking this.
You're taking it. Okay, and two more interesting picks to come. But you've taken Anglo American on this particular one. Andrew Dittberner, let's move on then. And focusing on the smaller side of the market, I hope you got your micro caps and your small cap hat on.
This could be interesting, yeah.
Have you ever heard of a company called Onelogix? I think we've all heard of it. Do you have the vaguest idea what it does?
No.
Well, Andrew, why don't you tell us in 30 seconds?
It's a logistics business. 90% of their earnings come from moving cars and commercial vehicles from port to showrooms. Their earnings for the last 10 years, I think they've had one blip. The earnings are underpinned by cash. It's a capital-intensive business. However, they're self-funding. The cash funds their growth, so it's very cash generative. When you look at a valuation on a PE of 10, you can compare it to the likes of a super group. It's trading on cheaper multiples. I'll argue that management's of high quality.
And aren't they the guys who own Postnet as well?
They do own Postnet, but that's a very small sideline.
Do you know what they charge to hire a post box for a year? I've just experienced that. It's twice the price of the post office, and they're still got to rely on the postal system. But yeah, okay, so Onelogix, they own Postnet. They are a logistics business. You like the logistics space, I think, Mike?
I love the logistics space.
Okay, so Onelogix, would it be on your
Broadly
on your
speaking, I mean, structurally, I think that's exactly the right place to be in the South African economy, because we're urbanising, because we've got long... there are vast distances between our main centres, etc. I mean, by the sounds of it, it sounds right up my street. I've never really looked at it. The only caveat I'd have
is liquidity.
Well, liquidity is one.
The only other guy.
But the issue would be now that the car market's going to slow down quite dramatically. Yeah. If that's the mainstream, that might be the only thing that trips them up. When the market's normally normal, and like it has been last year, I would imagine a business like that is absolutely flies.
It's a 685 million rand market cap. It is a pimple on the backside of a supergroup, for argument's sake. It is absolutely tiny. Why do you prefer it to supergroup?
Yeah, I think these sort of businesses fly under the radar. Not too many, or definitely no big institutional managers look at it. So therefore you can pick up fantastic little businesses that have done superbly well over the past decade, and you can talk again of the
And then you sit with them, because the institutional guys are the big guys. Mike, who doesn't pay attention to the smaller companies, lots of people like him, it never gets the traction it needs. Exactly. Or do they?
No, they do. They do eventually get recognised.
How long do you have to wait?
You could look at a Pinnacle Technology, for instance, that traded at 50 cents 10 years ago, as you're well aware. How long do you have to take? Well, if you had waited for 10 years with Pinnacle Technology, you would have done 2,000 times your money.
Absolutely.
So, if you're patient, you can find these small, fantastic little businesses. Another positive of Onelogix is they've just bought back and cancelled 10% of their outstanding shares. They bought them back from their BE partner. Wasn't in their final numbers, so you can take off 10% of that.
But then they've got to do another BE deal, surely.
It's on the radar.
Yeah, because again, in that logistics space, you're dependent on government contracts, you're dependent on all sorts of contracts, and if you don't have BE credentials, you're a bit messed up.
Yeah, sure. There's that side of the argument as well. Okay. They're diversifying away from the pure car and commercial vehicle logistics side of it. They did an acquisition. They do small acquisitions, which is nice. They don't go and bet their house on it. United Bulk, which transports fuels, or liquids rather. So they're diversifying away from the pure car market as well.
Let's see whether or not you managed to convince Mike. He's got his poker face on. I never play poker against him. I never have, and I never will, because you never know what's going on behind that face. Okay, give me a sense of it, Mike. You shot down Metair Investments. You don't know what's coming in position number 3. You like the logistics space. Would you be willing to take a punt on Onelogix?
No. And the other reason would be is that I'm quite worried about the market this year. I don't think we're going to get much performance out of it. And I think we're going to find it's very choppy. And as a consequence, I want to play in bigger stocks. I don't want, in principle, to actually be in the smaller stuff. When the cycle starts to turn, I agree 100%. That's going to be a great
his
stock.
His last company is bigger than Onelogix, I'll tell you that much. So you want to go bigger?
Okay.
Not much bigger, but it's bigger. You've shot down Onelogix. Okay, so Andrew, he's playing for keeps over here because he shot down Metair Investments. He shot down Onelogix, two great small businesses that you say hold long-term value, and you've got to be patient. And you bring up the example of Pinnacle Technologies, which is one that we cannot ignore. I'm looking forward to seeing the look on his face when you mention number 3. Okay, let's then go, Mike Haworth from Applied Capital Insights, into your stock pick number 3. It is a business with a market cap of 8.7 billion. It trades on a multiple of about 11 times. It doesn't pay a dividend at this stage. It's been through a massive turnaround space. It's in the logistics area. What company might that be, Andrew?
Supergroup?
Could it be Supergroup? In 30 seconds, tell us why. Two opposite ends of the same sector. Let's argue Supergroup.
Well, it's in the logistics area. So, I mean, on the supply chain side, it's got couriers, freight forwarding, it's got inter-Africa transport, which is a really big thing. It's got all of those kind of things, rental, so that's a very strong side in this kind of environment. The fact that the economy is slowing down, I suspect is actually going to strengthen that part of the business. Then they've got SG Fleet, which is fleet management. Fleet Africa is fleets for government. They lost the Joburg one, but they're replacing it with others, Nampak, Goldfields, etc.
Your 30 seconds are up. That's it. Excuse me. I feel like we've had the conversation already, though. Andrew,
I feel I've got another hit at this later.
I think you might very well have. Give me a sense of it, please, because you like the logistics space, but you prefer Onelogix over Supergroup. Why not Supergroup?
Yeah, if you look at the transport space in general, I think there's some fantastic opportunities. Onelogix is the obvious our choice in that market. I think Supergroup's a fantastic business, and from turning it around from where they've come in the last 5 years, they've done an outstanding job, and it's a high quality business now.
But when don't you wish you bought it at, what was the bottom?
Exactly.
Where did it, how low did it go?
18, wasn't it?
No, it was down at single digits.
Yeah.
It was a disaster zone.
Yeah, so you might have missed the best part of that recovery already. The one thing, it's a very cash generative or capital intensive business, as most logistics companies are. And they've got a big cash pile. I think they've got about 2 billion rand sitting on their balance sheets. Why aren't they, what are their plans with this?
They might buy Onelogix.
That would be great if they paid the right price. What are they going to do with this cash? And as a value manager, what we really like to see is businesses paying out their cash in the forms of dividends, share buybacks, also.
Or growing the business.
Yeah, you can say growing the business. If you look, research shows that, and this is a generalization, that management tend to be poor allocators of capital. You'd rather pay the, obviously hold on to some depending how much capital they need to grow the business, but you'd like to see that excess cash being returned to shareholders rather than being wasted on
Are you anticipating that, Mike?
I think they're going to probably buy back shares. In fact, they've indicated they'll buy back shares with some of that cash.
Isn't there more of a pan-African opportunity? I know they go across borders, but isn't there a
it's the African transport logistics, which is one of the big attractive areas, because of course all our neighbours are growing much faster than we are. Yep. So, and we're the conduit, and of course they also transport between Beira and Harare. So that's another conduit. But for me, there's the hiccup they had in SG Fleet in Australia. Champ Ventures is going to pull out of that, disinvest out of that. They're going to list that. They're going to probably have to lift their holding in it to 50.7%. So I think that's going to actually allow them more flexibility to get stuck into that business and tidy it up a little bit. So I just think there's a secular growth story about logistics in this country. To me, what's fantastic about logistics, it's an adaptive industry. Yeah. So it doesn't matter whether the infrastructure is getting messed up, it's not being fixed. These guys
stuff still has to get from A to B, and they will find a way of doing it.
Exactly.
Okay. Do you take it, or will you shoot it down?
I like the business. I don't think it's expensive, but given that we're in the exact same space here, you got Onelogix, which I think over the long term offers an investor much better potential.
You're shooting it down?
I'm going to shoot it down.
There we go, an interesting discussion all around logistics. Who will stay and who will go? You won't want to miss the final share picks because, of course, Mike Haworth goes into the final round without having picked anything. He shot down Metair and Onelogix. He may live to regret both of those shoot downs. And then Andrew Dittberner accepted Anglo-American, but has shot down Supergroup, not because Supergroup is a lousy business. He just sees more opportunity in his pick in Onelogix. We'll see you when we return. The reason I host the show is because it's the only power I have. I'm the only one who knows what they don't know, and my guests this evening have pre-picked 3 shares, of course, here on Share Shootout on CNBC Africa, first in business worldwide. Before the break, Andrew and Mike both gave us 2 of their stock picks. From Mike, we got Anglo's and Supergroup, and Andrew shot down Supergroup because he prefers his pick in that sector. He accepted Anglo-American, however. And then Mike is going for broke. We'll see how good his strategy is on this one, because he shot down both Metair Investments and Onelogix Group Limited. You don't know what he holds in his hand for his final pick, so we're going to make you sweat by making you go first, Mike, with your third pick for this evening, which is a big winner of 2013. It really has come right in 2013, and it plays smack into one of your favorite sectors, which is all about packaging, which is all about these things. Mondi, you just love it. 30 seconds.
I do. I think they've repositioned the business. They've done a lot of very smart strategic repositioning in Europe, in Central and Eastern Europe, and that's the thrust of the business now. So 83% of their net assets are in emerging markets with very low operating costs. 2/3 of the business now packaging rather than paper, because of the switch that's taking place in paper. And where they are in paper is in Eastern and Central Europe and South Africa, where we're still printing everything flat out. So the business is looking great.
There we go, business is looking great. But that's the problem, isn't it, Andrew? I mean, you like to go and ferret around in the bowels of the JSE to go and find the value. Mike likes businesses that have proven their worth and have proven their value. Supergroup has proven that it's got a great business model. Mondi has proven now. And it's nice and safe and it's nice and secure, and you're not going to lose buckets of money on it.
I think when you say proven, you know, 1 year doesn't prove anything. I think you've got to be proven over
it's that lack of sleep.
5 to 10 years.
Yeah.
Mondi's had a great year, and I think they're doing the right things. They're moving away from the paper into the plastics. However, when you look at, you know, over the past year and the share price, I know it's come off slightly recently. You know, from a valuation perspective, when you can look at the paper companies, Mondi, Sappi, we know have had a tough time. It's a sector that we're not interested in at all at the moment.
Shooting it down
as a value manager, so I'm going to shoot it down.
In flames. We're not even going to argue about it, Mike. It's shot down.
I'm not done yet.
No, you are done, I'm afraid. You are done, because I want to get to the absolute clincher, because no matter what happens, you've got to find a reason to support the final stock pick that Andrew presents to you this evening. And it's smaller than Metair, but bigger than Onelogix. It's smack bang in the middle. It's worth about 5 billion rand. Les Franken made it famous. Clientele life in 30 seconds.
I think if you want to look for a high quality business, this is the one. It's the only company on the JSE over the past 15 to 16 years that has grown its earnings year on year above inflation. So I think if you're looking for a good quality business, you can't look further than Clientele. They're innovative. They've got their RFAs, or the independent field advertisers, so you and I can go and sell their product. That keeps their costs very low, which the other life insurers don't do. It's quite tightly held by the family, so it's fairly illiquid. It does fly under the radar of institutional managers. So again, you're buying this business, which
30 seconds is done. I'll let you finish.
Don't think should be priced on similar multiples to your large life insurers.
You got to take it.
No, I'm happy to take it. I mean, it actually had a bit of a hiccup a couple of years ago where things fell off the rails, but they've tidied the business back up again. And I think that there's, you know, typically in any industry where you've got a couple of big guys like this, there's lots of room for smaller guys to play in between and do very, very profitably. Thank you very much.
Their sales their sales mechanism is really interesting. You and I can go and sell their policies.
It's called RFAs, or independent field advertisers. So you can start your own little business selling Clientele policies, and you get paid. You take a commission. You don't need to be employed.
I tell you what, you hold this, because I've seen what cars insurance brokers drive, and I quite like this idea.
Yeah, and they operate in the low to mid LSM market, which is the market where you're going to see growth.
Absolutely, but when guys like Hollard, for example, unlisted, are operating, and they'll let almost anybody use their license, isn't it massively competitive in this insurance space, Mike?
Oh, I think it is. It is. But again, I think the way you handle your brokers and your distribution and sales thing is everything.
What about treating customers fairly? What about the cost of product? Is that not a threat?
They keep their cost of product quite low because of their low cost base.
Mike, you're taking it?
Yeah, taking it.
Okay, now I've got to make the very difficult choice, because it is a tough choice, and sometimes it's easy, sometimes it's hard. Andrew Dittberner, at the more adventurous end of the market, in the superdog space of Metair Investments, Onelogix and Clientele Limited producers. I need some assistance over here, please. Mike Haworth from Applied Capital Insights with Anglo's Supergroup and Mondi. Who made the most convincing arguments? I need the voices in my head. Okay, so there we go. I get the voices of my producers. Do I listen to my producers or do I not? Andrew, do I obey my producer?
Yeah, I think go for it.
Mike, do I obey my producer?
No.
Okay. Michael, thank you so much for coming. Enjoy your next photographic spree.
Thank you.
The producers voted for Mike, but I overruled them because Andrew Dittberner, I want to see whether the bags under those eyes get any bigger next week when we welcome you back. Join us again next week when two guys wrestle it out right here, two guys and a girl, whatever. Well, we're not very sexist on the show, although we need some women on the show, don't you think? Some stock picking TV as you've never seen before. Send the producer your thoughts and suggestions, but don't forget to tweet me compliments on @BruceBusiness. Thank you for watching, and well done to Andrew Dittberner, who is just by the narrowest of margins scraped through to next week. Good night.